Today, we're putting on our financial detective hats. We're going to go way beyond the burrito bowl to decode a company's quarterly report. And our goal? To uncover the clues hidden inside the numbers and figure out the true health of a business you almost certainly know, the one and only Chipotle. So, that's the big question, right? We all know the food is great, but what about the financial story behind it? Is Chipotle really as healthy as it seems, or are there some underlying issues that we, as investigators, need to bring to light? You know, every good investigation needs a case file. And for us, this is it. Chipotle's official Q3 2025 Form 10Q. This is the document they have to file with the government, and it is our primary source of evidence. All the clues we need are right in here. All right, so where do we start our investigation? Well, let's begin with the most obvious thing, sales. Is the business growing? And maybe more importantly, how fast is it growing? Let's see what the data tells us. Okay, boom. Right away, we found a huge clue. What you're looking at here is comparable sales growth. It's a super important metric that basically asks, are the same stores selling more this year than last year? And look at this. A year ago, growth was a really solid 6%. But this quarter, it's fallen off a cliff to just 0.3%. I mean, that's not just a slowdown, that's slamming on the brakes. Something has definitely changed. So how did they even get that tiny little 0.3% growth? Well, this is where it gets really interesting. The report breaks it down for us. The average check, how much people spend per visit, went up by about 1%. But look at the line below it, transactions. They actually went down. That means the only reason sales went up at all is because they raised prices. Fewer people are actually walking through the door. Okay, so if growth has practically ground to a halt, the next logical question for our investigation is, what about profits? Are they at least making good money on the sales they do have? And here's our answer. This shows the restaurant-level operating margin. Think of it as how much profit each individual restaurant makes before you account for all the corporate office costs. And you can see that margin is getting squeezed. It's dropped a full percentage point in just 1 year, from 25.5% down to 24.5%. That's a big deal in this business. So why are they less profitable? Well, the report doesn't hide it. It lays out the culprits for us pretty clearly. This big slice here, other operating expenses, that includes stuff like marketing and delivery fees. That's the main driver. But you also see higher costs for labor and for rent. All of these things are taking a bigger bite out of their revenue. Now we get to my favorite part of any financial investigation, following the money. You know, sales and profits are one thing, but cash is the absolute lifeblood of any company. So let's trace where the cash is coming from and, just as importantly, where it's all going. Before we look at the numbers, let's get our heads around this really powerful idea, the self-sustainable growth rate, or SSGR. Just think of it like this. If Chipotle couldn't raise any money from Wall Street, no new loans, no selling stock, and could only use the cash it makes from selling burritos, how fast could it grow? A high SSGR is a sign of a really strong, really resilient business model. And this number right here, wow, this shows you the power of Chipotle's business. In just 9 months, its core operations churned out almost $1.7 billion in cash. That is an incredible amount of strength. This business is a cash-generating machine. But the real question is, where did all that cash go? Okay, so first, a big chunk, about $469 million, was put right back into the business. This is what's called capital expenditures, and for Chipotle, this is mostly the money they spend building brand new restaurants. This is the cash they're using to fuel future growth. Makes sense. But now look at this. This is the crucial point of the cash story. They spent nearly $1.7 billion buying back their own stock. That is almost the exact same amount of cash that the entire company generated from its operations. Think about that. This is a massive part of their financial strategy. Instead of plowing all that cash back into growth, they're using it to buy their own shares, which returns value to shareholders. So we've got this picture of slowing growth and shrinking profits, but a business that spits out an unbelievable amount of cash. But, you know, some of the biggest clues in these reports are often buried deep in the footnotes, especially in the legal disclosures. This is where we really have to read between the lines. And here we go. This is a major red flag, and it's a direct quote from Note 11 of their report. Chipotle is facing lawsuits from shareholders who are alleging the company made materially false and misleading statements that pumped up its stock price. That is a very serious accusation, and it points to some significant legal and reputational risks ahead. So let's just step back and summarize the risks our investigation has uncovered. We have clear evidence that their profit margins are under pressure from rising costs. We can see that sales growth has slowed to a crawl, and it's only happening because of price hikes, not because more people are coming in. And on top of all that, you have these very serious legal challenges that really raise some questions about governance. All right, it's time to act as judge and jury. We've gathered all the evidence from the sales data, the profit metrics, the cash flow statements, and, of course, those legal footnotes. So let's pull all these clues together and deliver the final verdict. What's so fascinating is that the evidence we've collected really tells two completely different stories. There's the bull case, the optimistic view. This is a company that generates enormous amounts of cash, has basically no debt, and a strong digital business. But then there's the bear case, the pessimistic view. This is a company whose growth has stalled, whose profits are getting squeezed, and that's facing serious lawsuits. And the crazy part is, both stories are true, based on the very same set of facts from this one report. And that brings us to the final, and I think most important question. It's about a classic investing idea called the margin of safety. It's basically the cushion you have between a company's strengths and its weaknesses. We've seen Chipotle's incredible strength, that cash-generating power, that high self-sustainable growth potential, but we've also uncovered real risks, slowing traffic, and those legal issues. So with this full picture, the critical question for any investor becomes, where is the margin of safety for Chipotle today? That's the question this report leaves us with.